Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on Dr. Reddy's. The company reported healthy earnings driven by strong sales in the US and Europe region, which has helped the company to retain EBITDA margins at 29%. The company expects sales movement to increase, driven by first is Revlimid, second double-digit growth in the India region, and third, nearly 26 meaningful new product launch in the US market, where majority would enjoy FTF, which will increase EBITDA margin to 30% plus by FY26. Out of 26 products in the pipeline, the company has mere 2 products filed from FTO3, which can be shipped to another site. Hence, the new product does not have much risk. The company also has a portfolio of 6 biosimilar launches, which are expected to start from calendar year 27. We believe the company is on track to sustain its superior performance both organically and inorganically, coupled with strong net cash of $710 million. Hence, we maintain buy on the stock. The stock is currently trading at an attractive valuation of 16.8 times FY25 and 14.9 times FY26 estimated EPS of Rs 348 and 391 per share respectively.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.